Hey, Chris, it's good to see you. Today we're talking about the new 2023 tax brackets and how it means we get to keep more of our money from the IRS. I like the sound of that. Inflation
Always.
adjustments could mean lower tax rates in 2023. Tax rates are adjusted for inflation, and 2022, as we know, saw the fastest price growth in 4 decades. So now we're going to be able to shield more of our money from taxes in 2023. Explain what's going on here.
Yeah, we've been experiencing the negative impact of inflation and increase in the consumer price index. We felt it at the pump, we felt it at the grocery store.
Yep.
Now we're actually going to see some and experience some of the positive effects, if you can believe that. And that's going to show up in the tax code. So
Okay.
actually, there are parts of the tax code that are linked to inflation and the CPI. So when inflation changes, when the CPI changes, the tax brackets adjust. CPI is now at 7.1, which actually is down from 8.6, I think, which is really, we've seen that reflected in the recent stock market rally.
Hmm.
So it's the change in CPI, the change in inflation. We're now going to experience some of the positive outcomes of that with the new taxes.
All right. So as we are looking at those new tax brackets, Chris, I know that tax planning is very important to you. So my question is there anything that we should be considering right now in regards to tax planning for next year?
Absolutely. Tax planning is key and core to our advisory firm and the guidance that we give. We are not tax planners. We work very closely with tax planners. But this is a wonderful opportunity to take advantage of a couple of things, one of which are Roth conversions. With the increase in the tax brackets, and which means you have to make more money in an individual bracket before you trip to the next tax bracket, that opens the window to do some tax planning for the future and move from tax deferred savings to tax free. And that's through Roth conversions.
Hmm.
So, with the new tax bracket, it allows you to make a conversion, convert more funds within the same tax bracket, which will help you out further down the road for sure.
Okay. I want to talk about another kind of good news moment here. The IRS is also increasing the standard deduction. It's actually the largest adjustment to deduction since 1985. Here's a look at those new numbers. Who does this help?
It really helps those who don't itemize, and that's getting to be in some ways more and more of us. So, for those who do not itemize, that increase in deduction simply means we get to keep more of our money. We get to show less earned income in a particular year. As we move closer to retirement, our deductions tend to drop off. We don't have a mortgage anymore. A lot of the deductions that we've had with kids and college and homes, those things start to go by the way. And so the increase in the standard deduction really helps those who are not itemizing,
Okay. Boy, Chris, I love it when we get to bring everybody good news. This is really fantastic. I think
especially
that,
most
yeah, we've
recently.
covered
Yeah.
so many important topics, though. If somebody has any questions about anything they've heard, or like you mentioned, Roth conversions, what's the best way to reach you?
They can reach us here at the office. Our number is 509-467-5117, or reach out to us via our webpage, myifsteam.com. That's myifsteam.com.
That's great. Chris, thank you.
Absolutely. Aaron, it's always a joy.